In this lesson, we're going to be looking at Fibonacci, the Fibonacci tool itself. And you guys are probably familiar with Fibonacci itself, the Fibonacci sequence, the Fibonacci retracements and extensions, also the golden mean, the golden ratio, the golden number, okay? 0.618, 1.618, okay? Google it. If you don't know what Fibonacci is, Google it. Fibonacci is literally present everywhere in nature. Our body, it consists of Fibonacci itself. The difference between, our shoulder, the length of our arm, and how the size of our hand compares to our forearm, compares to the length of their entire arm. As an example, there's Fibonacci within our body. If you ever looked at a seashell, you'll notice the Fibonacci spiral within the seashell. If you ever looked at the head of a sunflower and you look at, the seeds of that sunflower, you're going to notice that there's a Fibonacci spiral within that sunflower. And the rose itself, every single flower almost has some kind of Fibonacci sequence within it. And like I said, it's literally everywhere in nature. Wherever you look, you will find the Fibonacci sequence, Fibonacci spiral, or the golden number, the golden mean. Now, if you're not familiar with it, Google it to get, familiar with what Fibonacci itself is. But what we're going to be focusing on here is something that's extremely important, very, very, very important, is the Fibonacci retracement tool and the Fibonacci extension tool. The Fibonacci retracement tool is the one that I use quite a lot. Fibonacci extension, I use it a tiny bit. What's the difference? Fibonacci retracement, again, it's a tool, it's not an indicator, it's a drawing tool that you will use, and every single charting platform has it. And what it will do is you will draw it from the lowest point to the highest point. Let's assume it was a bullish run, okay? So you're going to draw it from the bottom of that bullish run to the top of that bullish run, and then it's going to give you a point of reference for potential pullback. How far will that pullback go? Okay, so that's what a Fibonacci retracement will tell you. You will draw it based on the run, and then it will pretty much predict, not really predict, but it will tell you how far a potential pullback will go, okay? And Fibonacci retracement is extremely important. You have to understand it because I literally use it in every single one of my strategies. I use it for entries, I use it for targets, I use it for stop loss placement. So it is a very important tool. And like I said, it tells you how far that pullback could go, what a good pullback is, okay? So we're gonna have a look at the charts and I'll show you exactly that. Fibonacci extension is very similar, but it's a little bit different. It will still use the same Fibonacci sequence, that spiral that I was talking about, to figure out not the pullback, that's the retracement, that's the Fibonacci retracement. Fibonacci retracement figures out the pullback. Fibonacci extension figures out what happens after that pullback, and that is the run. So how far could that run go? That's what the Fibonacci extension will measure. And when we look at the chart, you'll see how significant it actually is, how well it works. And that's why I use it. I can literally scrap all the indicators. I can scrap everything and just simply look at price action analysis and Fibonacci and trade simply based on that, just using those two things, price action analysis and Fibonacci. I don't need any other indicators. They're helpful, they're very useful, such as the 50 EMA, but at the end of it all, if I don't want to use any indicators, Fibonacci tool and price action itself will do the job just fine. So, and that is how important it is to my trading. So with that said, guys, let's jump on the charts and I'll talk more about the Fibonacci retracement and the Fibonacci extension tool. All right, guys, so looking at the charts here today, right now in this lesson, we're going to be looking at the chart of gold. Gold ticker symbol is XAU, okay? So gold dollar. And we're going to be focusing on Fibonacci, the Fibonacci tool. You guys have probably heard of Fibonacci in various ways. There's the Fibonacci number, Fibonacci sequence. There's the golden mean, the golden number, the golden ratio that you guys have probably heard about, okay? Fibonacci is a tool that is literally present everywhere in our day-to-day life. The Fibonacci is within our body, okay? There's a connection between literally parts of our body that is perfectly based on the Fibonacci sequence. Fibonacci has been used in the ancient civilizations while structuring the pyramids and the ancient, literally majority of the ancient sculptures and sites have been built based on the Fibonacci sequence and the golden mean, the golden ratio, right? So it's literally everywhere. If you look at the sunflower head, you know, the head of the sunflower with all the seeds, you will notice that the Fibonacci spiral is in there. If you look at a shell of a seashell as an example, you will notice again that the Fibonacci spiral is within the seashell. It's literally present everywhere, you know, and it's even present on the charts. You know, is so interesting. And to me, this is literally where you look at like the metaphysical world and put it together into the charts, you know. And Fibonacci tool is something that allows you to do that in a way. And the Fibonacci tool itself, like I can personally, I mentioned this in an earlier lesson, I can take out the Fibonacci itself, take out all the indicators and start just using Fibonacci and price action. But with that said, let's have a look at it. So what we're going to be focusing here on is the Fibonacci retracement tool and the Fibonacci extension tool. Fibonacci retracement is something that I use all the time, okay? And it goes something like this. So Fibonacci retracement is drawn from the extreme high, okay, like in this example, the extreme high to the extreme low. You measure the run, okay? So with the Fibonacci, you're measuring the run. So we got the extreme high, we got the extreme low. And then what the Fibonacci sequence gives you is the pullback, okay? It measures the pullback, a potential pullback. To me, the best pullback, okay? And then the Fibonacci extension gives you the trend, gives you the run. So whereas the Fibonacci retracement gives you the pullback, Fibonacci extension measures the run. You see how it perfectly lines up? You know, so this drops and then pulls back to 0.382 Fibonacci and then drops to 0.618 Fibonacci extension. So which Fibonacci tools do I use? Or numbers, levels, you know, let's say that. So this is the Fibonacci retracement tool. Okay, there's many levels that you can toss in there. The major one is 0.382 Fibonacci. To tell you the truth, this is the most common one. Every single, I don't want to say every single rejection, but majority of the rejections are rejecting 0.382 Fibonacci. So that is a must, okay? It's literally, you will see me use this tool all the time with every single strategy. I use it for entry placement. I use it to measure the pullback. I use it to measure the potential run. I use it for targets and stop loss, you know? So that's why I say I can eliminate all indicators and just use price action analysis and Fibonacci, because I use it for everything. It's that good. So 0.382 is the main level. 0.5, which is just halfway through. It's halfway, the halfway point of a run. And 0.618. Okay, 0.618, that's the golden ratio. That's the golden mean. 1.618 is the correct number, right? So these are the most common ones. 0.75, I have it in there as well. That's not the correct Fibonacci number, but I just have 0.75 in there to use as a stop loss placement. And I will explain that when we start digging into the strategies and into the lessons themselves, okay? But that's what you need to be familiar with. So over here, when you measure it from the high to the low, that's going to give you a potential pullback, a potential retracement. And we had that there, okay? Then what is the Fibonacci extension tool? The Fibonacci extension tool gives you the run. It measures the potential run before price action starts to slow down, like in this case. So the way that is drawn, you know, so the Fibonacci extension will be drawn from the top. It measures the trend, okay? So you measure from the extreme high, you measure the run, or the breakdown in this case. Then the pullback, and you see how it's adjusting. And that would give you a potential target. Now when you will be measuring this, you'll be measuring it at this point, at the time of the entry. Okay? And then you will be taking the trade here. This is how it will pretty much go. You will take the trade there, and 0.618 will be your target, and you will have your stop loss somewhere here. So you would use Fibonacci retracement, right? Your entry will be somewhere on the rejection. The way I will teach you in the strategies is your entry will be at 0.382 Fibonacci, so you will be just triggered in. Your stop loss will be above 0.618 Fibonacci or above 0.75, depending on the strategy. And then your target would be 0.618 Fibonacci extension, okay? And there you have a risk reward of 1.5. And then how did that play out? Right, we saw it, and then it was hit before a pullback, okay? So that's kind of how it goes. Now, this Fibonacci retracement tool, I don't use it all the time. I will use it once in a while. It works really well, but I will have other targets based on multi-time frame analysis often, okay? So typically my targets will be based on multi-time frame analysis, which we still didn't dig into. That will be in the coming up lessons. But the Fibonacci retracement tool is great, you know. So these are, for the Fibonacci retracement tool, the measurements that I use, or the data points, is 0.618. That's this first level that we just looked at. 1.0, and 1.272, and 1.618. Okay, 1.272 is, from what I found, a really good level as well. And it also offers a lot of rejections. You know, so sometimes you might want to push to 1.618, sometimes to 1.272, and you can see there was another slight pullback, then continued lower. So that's the basis of it. Let's have a look at it more, okay, from different pairs maybe. Let's just pick a random one. Let's have a look at the Australian dollar. Okay, random pair, and how does it play out? Okay, I'm just gonna start drawing random Fibonacci retracements, okay? So let's have a look at this one from here. This is measuring the run. Okay, and you can see it came within this Fibonacci range. It didn't reject 0.382, but it went lower. You gotta remember, this is Fibonacci is used as support and resistance. You still gotta apply all the other tools that we will be learning, like multi-time frame analysis and the strategies themselves to take a trade. But the Fibonacci retracement is support and resistance at the end of the day, you know, and the range between 0.382 and 0.618 is a support and resistance zone. It's a support zone. So price can go anywhere between this zone because all levels 0.382 and 0.618 are common. I find that 0.382 has much many more rejections, but it can go all the way down to 0.618. That's why your stop loss, and I will teach you that, will typically stay below 0.618 or 0.75 to give it more breathing room. And that's something we will cover later as well, okay? So that's one way of drawing it. Now you can also draw it here. And you'll notice the same thing was rejecting that same area, right? So it's a measurement for the pullback. And then with that, it gives you target placements and stop loss placement. Here's another example, you know, perfect 0.382 retracement. You know, you'll notice a lot of times it will line up with the 50 EMA as well. You know, so again, how would this be played? You would have had a place entry order somewhere here, and we'll draw the Fibonacci retracement in a second, or sorry, the Fibonacci extension. Here it is. Draw from the high to the low to the pullback, you know, and then here it is. Here's your target, first potential target, you know, there. And there's your 2 to 1 reward risk ratio setup. You know, so this is now you're slowly starting to get an idea of how trading really goes, or how technical analysis really flows. You know, because we looked at deceleration, you know, so now we know what a we looked at support and resistance. You know, the 50 EMA is a support and resistance level, right? Then we looked at candlestick formation, and we looked at deceleration, right? So here we go, deceleration. Then we looked at, you know, the trending market. Here's a new trend, lower low, lower high, okay? Lower low, and now we're in a bearish trend. And now we're using Fibonacci to measure the potential pullback, the potential retracement of every single run, okay? And that's gonna give us a potential entry price, potential stop loss, and if you can use Fibonacci extension to measure a potential target, okay? So as you see, it's a great tool, and literally I use it all the time. Here's another example. You know, draw it from the low to the high. That's the breakout, okay? Look at that. perfect 0.32 rejection and price went up to the highs, right? So it's literally, like I said, you will see me use this tool all the time and in every single analysis that I do. Let's have a look at one more example before we wrap up this lesson. Let's just pick a random chart. Let's go back to pound dollar. And well, we already looked at that example, so let's switch it up. Let's go to Kiwi dollar. I'm just picking random pairs here, nothing significant. All right, let's have a look at this daily chart. Here it is right away. We can see where it lines up. You know, so we're measuring the run. So we measured the run from the extreme high to the extreme low, and check that out. You know, again, daily 50 EMA lines up with 0.38 to Fibonacci. We got 0.38 to Fibonacci, so we have a perfect pullback. So, you know, I would never be entering a short position right here as an example, because it did not retrace to 0.32. You will see me, I would say 95% of the time, all my entries will be off of 0.32. So if price action did not reach 0.32 Fibonacci, you know, like right here, I wouldn't still not be looking for a short trade. I would always be looking for a pullback to 0.32. There might be a rare occurrence where like there's just beautiful price action and maybe an amazing horizontal support and resistance level or something that I might considering an entry earlier. The majority of the time, I would say more than 95% of the time, I will be waiting for a pullback to 0.38 to Fibonacci before I take the trade short. You know, let's have a look at the Fibonacci retracement, or Fibonacci extension, I mean, in this example. And there it is, again, 0.618 acting as a beautiful support level. You know, that's the first level where price action starts stalling on. So you see how it's just common everywhere in the market. We looked at already multiple examples, but it's just everywhere. You know, I'm sure you can either draw it here. Here's another example. There it is, 0.32 bounce. Lines up again with the daily 50 EMA, right? Where else? Let's draw it in here. Boom, another 0.32 rejection. You know, let's toss in some Fibonacci extension tools. So again, from the high to the low, you know, and this goes a little bit farther. It did not stall at 0.618, but it rejected 1.0 perfectly. You know, let's draw it again one more time here. Charts are getting messy, and this did not make it. Yeah, there was a double top, there's resistance there, and price action started to consolidate. Right, so there it is, guys. That's the brief example of Fibonacci retracement tool and Fibonacci extension tool. As you guys saw, it is common. It's very, very common in trading, just like in the real world. You know, Google it. If you guys don't know much about it, Google Fibonacci, Google the Fibonacci ratio, the Fibonacci sequence, the golden ratio, the golden mean, the golden number, and you'll notice that it's literally present everywhere in life. And it's so good in trading too. And like I said, I use it all the time. So we're gonna have much more exposure with this tool from now on. From now on, it's pretty much gonna be on almost every single lesson, specifically when we start digging into the management and the strategy sections of this masterclass. So for now, guys, I will see you guys in the next lesson.